in the past, ever since we moved from 5 to 6, 6 to 7, and now from 7 to 8. The Fair and Lovely sachet price transition does take time. People at that end when this happens, they look around, they scout around to see whether there is an old price stock which is available. In the early days, given how widely this brand is used, almost everyone wants to use it, the sensitivity for this price increase at that level is high, and therefore this is consistent with our experiences in the past. I too would like this transition to be over quickly, but it has taken time, and my feeling is it could take a month or two more.
So thank you so much. I'll come back in the queue.
Thank you, Mr. Manoj. The next question is from Mr. Jamshed from Citigroup. Mr. Jamshed, your line has been unmuted. You can go ahead and ask your question, please.
Yes, hi. Thank you for taking my question. Just wanted to touch a bit more on this Fair and Lovely aspect. Is it that you all are seeing now, sometime ago, sometime last year, there was an article which had come that, regional brands' market share had fallen dramatically over calendar 11, early calendar 12. Are we seeing regional brands making a resurgence back into this category? Is that why the transition is also taking slightly longer than anticipated?
So there is absolutely no evidence in face care that the phenomenon which you talk about is borne out. If anything, from a share point of view, Fair and Lovely within the segment is stronger today than it was before the relaunch.
Okay, so basically, it's not like you've lost consumers, they just stepped away for a while.
I think there is some pipeline correction, there is some consumption levels which people might be adjusting, but we haven't lost to any competitor.
Okay, thank you for that. On the royalty bit, could you share a bit in terms of the underlying logic behind these very precise increases? Is it linked to a Unilever R&D kind of formula?
When you say with precise increases, are you referring to the fact that it will be likely to be 50 basis points this year? Is that what you're referring to?
Exactly, yes.
So I think
it seems to be a very precise roadmap to 2018. Is there some sort of deviation which could occur based on how the mix and the volume change? Is this just indicative, or is this absolutely?
No, I think there is one aspect which is very precise, and you must feel reassured about that aspect, which is that the total increase that is likely to happen between now and no later than 2018 will have an impact on our P&L of 1.75 percentage points. That is precise. The phasing of it and how it is managed over time is not as precise and will be managed over the next few years in line with certain guidelines and principles that we've discussed and agreed with the board, the broad contours of which have been spelled out and will be made clear. And the most important thing for you to know is that in the immediate financial year, which is coming starting 1st February to April of 2014, the impact on our P&L will be 50 basis points. After that, the absolute impact in subsequent years and the increase in royalty to lead to a total cumulative impact of 1.75 percentage points will be decided closer to the time based on different criteria which have been spelled out by the board and agreed with the management.
Okay, thank you. I'll step back in the queue.
Thank you, Mr. Jamshed. The next question is from Mr. Manish Chan from Nomura Securities. Mr. Chan, your line has been unmuted. You can go ahead and ask your question.
Thank you so much. Sir, I had just one small question on the likely tax rate in FY14 and FY15. If you could give just some indication of that, it will be of great help.
Okay, so Manish, as far as the current financial year is concerned, you're aware that we estimate the tax rate to be about 24.5%. Yeah?
Correct. Yeah.
For the next financial year, we estimate that this could go up by about 200 basis points.
Okay.
And thereafter, to be honest, I think we should wait and watch for, what happens in the direct tax code, because, there is obviously that which is on the anvil, which is seeking to, as per the last draft, bring down the marginal tax rate to 30%. On the other hand, if, nothing happens and the direct tax code does not come and the tax rates remain unchanged, then the marginal tax rate will be 33%. And, some of our units will still give us some tax benefits in FY15, though it will be at a reducing scale. I think beyond FY14, somewhere in the range of 30 to 33 is the broad thing, or maybe 29 to 33 is a broad estimate. We'll have to wait for some time to see, what actually pans out. But FY14 is a more clearer estimate.
Okay, sir. Greatly helps. Thank you so much.
Thank you.
Thank you, Mr. Jan. The next question is from Percy Panthaki from IIFL. Percy, your line has been unmuted. You can go ahead and ask your question, please.
Good evening, everyone. Couple of questions from me and one more on housekeeping. First question is, I'm still not very clear on why the overall gross margin is down in spite of increasing gross margin in S&D category. I understand there would be an adverse mix effect, but is it so huge to take the overall margin in negative after S&D is in positive? That is question one. Second question is, not looking on a quarter-to-quarter basis, as you are saying, looking more long-term. If I look over the last 2 to 3 years, you have done great work across the board. So you have substantially increased your market shares in modern retail. You have made your products more competitive, and therefore, across the board, all the very small and unorganized players have basically been more or less wiped out. And you've done a lot of innovations in new categories, etc. So in the last 2-3 years, you have done basically almost 80 or 90% of what people would think that is there on the table. So going ahead, and your 10% volume growth which has come through is basically on the basis of all these initiatives, and therefore you have grown higher than market growth rate. Now, going ahead, how difficult is for you to keep growing faster than market growth rate, assuming that if you were to do so, you would require again new incremental big ticket initiatives as you have done in the last 2 or 3 years. And also coupled with this, just a sub question is any color on the CSD impact in terms of your sales growth that has happened in this quarter? If you could just answer these two, and then I'll come to the housekeeping question later.
So let me just deal firstly with the gross margin question and then hand over to Nitin to give you a sense, although the usual caveat that we did not give an outlook will apply, but maybe try and give you a color as to what we see as an outlook. I think, as I just mentioned in response to one of the previous questions, the overall COGS as a percentage of turnover, which is increasing by about 40 basis points that you see, is the net effect of what happens across the 4 segments combined. Because our soaps and detergent segment has grown by 20%, and the PP segment has grown by 13%, just the mathematical weighted average would put an adverse sort of mix pressure in terms of the margin progression. But when you look at S&D as a specific category, I just want to reconfirm that the gross margins have moved positively. However, segment margins are lower because of the increased investments we have made on A&P.
That was my question. That does not the increase in the gross margins of S&D offset the adverse mix impact?
So if you know, maybe we can pick it up offline. If you just do a simple Excel spreadsheet, and I guess you are hampered by not knowing what are our different levels of gross margin between S&D and personal products. So that perhaps is the one, let's say, piece of important information that you do not have access to, but trust me, that mix can play an impact.
Okay.
Yeah. Let me pass on to Nitin on your second question.
Yeah, I think all I would say is firstly, thank you for recognizing what you've done over the last few years. All I would say is that the opportunity that the Indian marketplace offers into the future remains strong. I would be absolutely not in the place of thinking that over the last 3 years we've managed to address 80-90% of the opportunity that exists. There is much more opportunity that the Indian market will offer, largely because there is more to gain through penetration in several categories and consumption in all categories. We just hope that we continue doing what you described very well, or what we have done in the last 3 years. We'd like to do that into the future, because our commitment and our